Morning, everyone. Much for this. My name is Shah. I'm the Deputy Governor of the South African Reserve Bank. I might more than 5 years ago, when I was the Chief Economist of the Reserve Bank, then became Deputy Governor of the department that Governor allocated me was payments, and I kind of you can't be serious. Payments, such a boring area, there's nothing to it. Little did I realize that if you don't know about payments, you can't exist in the finance world today. It is the sexy area, which is payments. My role is a simple one. My role is really to manage time. We have to finish at 12 o'clock promptly. No comments from my side, just to say we have distinguished panels. We have an incredible group. I'm going to ask the Governor to open up, and then we'll move to two very, very interesting panels. So, Governor, can I call you? Thank you.
Thank you very much, Rashad. I must say you did disruption in the payment systems department because it was staffed by IT people, and this economist started to ask very difficult questions. But welcome to our discussion on cross-border payments, which is one of South Africa's flagship priorities and also the subject of the tech sprint that we are conducting with the BIS Innovation Hub. As we know, the G20 endorsed the roadmap for enhancing cross-border payments in late 2020 to address the inefficiencies of cross-border payments. Since then, the FSB, the CPMI, and the international organizations have made significant progress, which includes developing a set of quantitative targets on speed, cost, access, and transparency to be achieved by 2027, and thereby establishing key performance indicators. Progress reports on the roadmap are published annually. This of the data has allowed us to understand complexity and regional in cross-border, which shows that there is still more work needed to take politicians into tangible outcomes for achieving the map are facing some headwinds, and we are hoping to achieve some practical solutions during this panel discussion. The aim of this event is to develop a better understanding of the critical bottlenecks and pain points to progressing the G20 roadmap in sub-Saharan Africa and discuss experiences in regions. Cross-border sub-Saharan Africa face a number of challenges which include capital control, AML CFT requirements, and data as well as non-aligned legal, regulatory, and supervisory frameworks. To the latest KPIs reported by the Financial Stability Board, the costs for wholesale and retail cross-border payments in the Sahara remain high and relatively low. A cost perspective, the sub-Saharan Africa region is one of the regions that's away from the target of 1%, as it has an average cost of 3.7%. with costs in certain payments corridors in the region exceed 10%. On the other side, the Southern African Development Community, the Southern African Development Community, the partners have embarked on a multi-year project to enhance cross-border payments in the region. The CPMI monitoring survey shows some progress. However, these changes have yet to lead into measurable improvement in the KPIs. At the same time, there are some regions making significant progress with implementation of the roadmap and are recording speeds and cost levels in cross-border payments that are well aligned with the targets in the roadmap, especially in the context of implementing, amongst other things, fast payment systems. And I must say that one of the things that also comes up here is that we have got to increase the level of interoperability in the payment. We must therefore show a way to learn, assess how we can implement those practices effectively in sub-Saharan Africa. Therefore, in 2, we will focus on the lessons from sub-Saharan Africa from those regions closer to the roadmap targets. Let me end it here, and I look forward to receiving your perspectives on what challenges exist in Sub-Saharan Africa and what are the solutions we could implement improving cross-border payments in the regions. I now hand over to the chair of the panel, and I suppose they will invite the panelists to come through.
Thank you very much, Governor. As you know, it's done jointly with the Committee on Market Infrastructure. So this session will center on impediments to cross payments. Our first panel belongs to Sub-Saharan Central Bank, known for forward thinking and innovative ideas on cross-border payments, and the remainder, which is really panelists from representatives of banks, which are regarded as prominent Pan-African banks. But let me introduce our moderator. We're very pleased to have Elisa de Andas Madrazo, who has over a decade of experience in laundering financism. That of President, one of her priorities is to promote further inclusiveness and regional perspectives as a key driver of social economic. Thank you very much.
Can I invite the panelists to join me in the stage so we can kick off this part of the session? Thank you. Thank you for the question and for participating in the meeting. The first Minds on Finance and Governors session under South Africa's presidency. This is been explored by the 5 years, and this morning we had an engagement breakfast talked about actions and solutions. So I'm very pleased to kick this accompanied by great panelists. I'll introduce them. At the Financial Action Task Force, I want to start talking about actions we have to lead this conversation into topic. So last week we had our plenary and we agreed changes to make sure that is achieved when implementing our change reset, which for this 1.4 people are still outside the system are instead where we from happening. Point even a than live on cross payments, and this is work G2T, and these are changes to be wire transfers now the payment systems. So I do invite you to engage with this consultation, and this follows, of course, the changes on the format of ISO 20022 and making sure the right balance between integrity but also accessibility to the payments. It's not easy, and we have worked on it and we attain it. For that, it's important to speak that are thematics in the sub-Saharan region that is facing still important challenges in their cross-border payments. So to lead this panel, we have 4 great panelists. I'll make very brief introductions so we can go into substance. To my left, immediately, we have Barbara Dreyer, who is the National Payment System and Financial Surveillance Director at the Bank of Namibia. We also have Richard De Ross, who is, since 2001, the Head of Operations and Corporate and Investment Banking at the Standard Banking Group. We have Biden Longwe. He's into banking and finance senior executive, over 27 years of experience, and is currently in the of banking in Botswana, Mozambique, South Africa, and Namibia, and Zambia, sorry, and with Isaac Hamut. Isaac has, again, also 30 years of experience in banking and currently heads the global EcoBank's payment and cash management business, which includes 34 countries, of course, a lot of the ones in this region. So to kick off the conversation, I have a high-level question, and this is, which are the main frictions, the main pain points that you find in the cross-border payments in the region? And I will ask each of you to be very concrete. I think we've been focused on the diagnosis for a long time, so we can go into the practicalities on the day-to-day issues that you're facing, and where do you think the solutions could be. That would be a great lead for the next session. So if we can start here immediately to my left.
Thank you very much, Madam Chair. Governor Yaho very rightly highlighted earlier of the fees of cross-border payments is 10 to zoom in. If we get within sub-Saharan Africa between Tanzania and Kenya in 23 about 25%. There should be a resounding unacceptable that should come as a chorus from this platform and global outside. So given that, what are some of the key friction points? So these are multiple. In some instances, the root causes are not very well established as yet, because it really depends also on the specific corridor, payments corridor. And whether and which payment segment it is. Is it wholesale? Is it at retail level, or is it at remittance level? So those are the key things that we need to unpack. There is definitely, from a regulatory perspective, I think by and large that has been established. It is a challenge. We have about 2 or 3 regulators that play within this ecosystem when it comes to cross-border payments. One regulator would be looking after payments efficiency. Another regulator would be looking at payments integrity, to your point earlier. And then you have capital controls, and then you have reporting requirements. Oftentimes, as regulators, we need to look at how do we have conversations that can lead to in this ecosystem. So when we provide guidance in terms of what need to be complied, it is clear, because what we are seeing on the ground is then different. Yes, the stands and the consultation is out now, especially recommendation 60. How jurisdictions interpret that and therefore operationalize and implement it at jurisdiction level, that has spillover effects to some of these transactions, therefore then also at a cross-border level. So not only is need to be held at regional, at domestic level, but also at cross-border level amongst regulators, so that we can therefore then see how best we can forge those trade-offs that need to happen there to enable technically as efficient payments. The other one is real access. It's probably by design that players sitting on the podium are some of the dominant market forces within this ecosystem. We don't see non-bank players here. Is it by design? It is, I don't know. Is these the challenges having? I'm not. I don't know. Maybe they are. Maybe they are not. So these are conversations as part of the collaboration between public sector as well as private sector that we need to have. And these need to be honest conversations on in that 25% that we have highlighted there earlier. Yes, there is potentially it's rails, it's cost, there is potentially some markups, profit markups, and so on. So those would be the things and the conversations that we need to have. Thank you.
So let's have conversations with representatives of the private sector. If I can invite you to your things that the audience here, you have the CPC and the international organizations that are working very hard to put this agenda. So what are the specific points? Maybe that would be an invitation that South Africa can take for our next session to pinpoint into this. What would, if may I take the Ross, please?
Thank you very much for the opportunity. we'll have a chat about a thing that is just so important to all of us. I'm going to focus a lot on the cost side because I think that all of the impediments that are well studied and well presented globally and all of the work that's been done to solve the impediments will result in the outcome that we're all looking for, and that is the lowest possible costs. We strongly believe as a bank that payment isn't the domain of banks alone anymore. Banks are a player in a payments industry. Banking is something that we leverage off payments and ultimately the payments industry. So partnerships with non-banks critically important. Why is the cost so high in an area that has so much focus around technology, so much of a crowded space? If you think about the payments domain and the payments world, if you look at sports payments all over the world, a new provider for. So it's a crowded, innovated area, yet the cost is high, and there's reasons for that. I think one of the reasons, and we'll talk about it later in the solutions and the practical outcomes, is how do we break down the fragmentation? Fragmentation, by definition, is going to grow up costs. We don't have sufficient base utilities and cost to share, and therefore the cost to serve our clients from one end to the next is grossed up by the bank area. In the banks area, it's grossed up by using traditional rails such as so those rails are particularly expensive cross-border, especially when you get into the remote. What we all find is that if you are fragmented, what you don't have is you don't have a common source of funds. One of the big things we need to learn from domestic fast payment systems is the ability to ledger off a single source of funds, whether that is a blockchain, distributed ledger, or whether it's worked through the bank's various technology systems. The source of funds has got to be available interoperably, and that's critically important. Otherwise, you're grossing up funds, you're creating lags to fund in nearer time, and often what we find is that our counterparties are using their own float to pre-fund. These are the things that get in the way of driving the costs up. We also, and I just want to point out in the opening remarks around the 8 to 10% costs, we haven't come far enough in competing with each other in the payments environment. And this is something that I think is really an area that needs a lot of attention. Clients should be at the benefit of commercial. We should be cost differentiating in payments, not differentiating to get it there. And in South Africa, the corridor that we've looked at before 10 years ago, and even 10 years ago, moved in taxis aboard, the physical price was 10%. In a world where there's been so much technology, so much modernization, the price is still 10%. So it really is an area that needs real focus and real attention. Some of the other things in our region is foreign exchange liquidity. In some of our countries, foreign exchange liquidity is scarce. So outward payments would be very difficult to access, but by and large, the diaspora flow is the money that is coming in on the left-hand side and is providing the liquidity to banks to compete for, to be able to do transactions on the other side, to be able to provide hard currency back their clients or their providers of services in terms of the client we see build as off that. Ancillary business or foreign exchange is important, therefore make it easy for the left side to access onto the end. Is all. Lack of transparency, we're moving very quickly towards a standardized ISO standard. That's a lot. Obviously, interpretation are still not there. And then finally, I just want to point to cash. Cash is still highly used on the African continent. We haven't yet. We haven't changed the final use of the payments. And what we have found, even in domestic payments, like countries like Kenya, where they're very successful with products like M-Pesa, still a large component of those is cash out. So backing cash is also adding those fees. Then, of course, we have to respond to regulatory changes and be extremely advanced in able to manage us in a very tight, fully strong market around AML and capital, etc. But obviously, you don't have a real solution to that at a possibly better way of doing it. These impediments are good. Can't read private, etc. But we find a way to make it work in a world that is continued to advance with technology. Thank you.
Thank you. Thank you very much. If I can take on your last point, DPP's data protection and privacy, it is a challenge. I'm speaking from the FATF perspective. You have the interlocutors for integrity, you have the private sector, but when it comes to DPPs, there's not one interlocutor at the national level. Of course, Europe, we're looking at by all regions. I'm curious to know from further speakers if there's a particular issue in the sub-Saharan and how are you dealing with it, or how can the community support that? So if I can to Biden, please. Biden, we heard specifically about Sub-Saharan, particularly the foreign exchange, the limitation. What else is particular to this region?
Thank you so much. And maybe after speaking after my colleague here is very difficult, but I just need to simplify maybe what we're for, because cross-border is the lifeblood for a lot of individuals, especially in sub-Saharan Africa, for businesses. And the key elements that we're solving for are speed, efficiency in terms of delivery. That one is colleague spoke about, but also crucially safety, the security. And normally you find that these three elements, once you solve for one, you find that, e.g., if you security, because you've KC and sure that you deal with the element, increases costs. So it is finding that's intended with three elements of cost, but also security. But what doesn't help is the lack of harmonization regulation. Then creates a big problem, but to look at it differently, if we can then interplay sphere, because here, maybe by contract, we only have bank. But if you look at non-banking financial institutions, how is the playing field in terms of regulation? At times, you find that there's differences in the way they're regulated, and at times you find that NBFI are perceived to be easier from an onboarding because the KYC is light. The cost of onboarding then makes it cheaper. But also, if you just look at element of cost, another angle is the lack of convertibility in most of the currencies in sub-Saharan Africa. For example, I'm Zambian. Sending money to a colleague in Mozambique in Metikash. It's not convertible directly from Kwacha to Metikash. I have to convert Kwacha into US dollars. US dollars in straight away, you have an increase in cost because just the lack of convertibility of currency. So the thing about it is that there's obviously regions and sub-regions that are now creating platforms so that we can deal with that, but we can maybe talk about that in delay. But I think it's very crucial that we put it right at the center of a conversation that if we really want to liberate the cost element, the issue of using or euro clearing has to be out of the conversation. We ignore that. Everything that we can in risk cost, in technology, in all the infrastructure that we're dealing with in our institutions, but that element will be the added cost. Also, the cybersecurity and fraud. I think it's really important that is put at the same conversation, because looking at is one. How you say is also from the end user, point of, but also in terms of, the data protection that you talked about, how rigorous is the process in different jurisdictions? And if we were to harmonize that, how easy is it to be in terms of, dealing with security, which is really, the level of sub-Saharan, look at the stuff around. But yesterday, can we transaction done by card? 50% of most of the sub are still, and we don't want to, because roads and the cybersecurity and some really hurt, the of the just educate, the platforms and also cost-effective. Thank you.
Thank you very much, and thank you for bringing up the fraud issue. At FATF, as I mentioned at the beginning, we've been advising recommendations. It's 2 decades wire translation at the beginning. So now we're looking to them, and we need to have a good level playing field for everyone. So the question here is, how do you bring them under the tent? How do you bring them so that you ensure integrity? And on that front, fraud is the main concern that we're seeing from the authorities at our table. We have 200 jurisdictions within the FATF, so it's truly global. And fraud is increasingly preoccupied. And the other, to the extent we have more players, addition means it's more to make sure information applies all the regulations across the board. So we're working very closely in these policy councils that we ensure that we adequate information, the control across the origin and the. So very much contribute. I'm going to last to Isaac. If I can ask you to be brief so we can last round of. So I'll ask knowing to because that will touch on this session, which is it's a. We want there. That's the important thing. So in terms of diagnosis, what else do you add so we can have a good table for the next session?
Yeah, thanks. Let me build on just what I've mentioned. So, as I was introduced around the payments business bank, privileged able to open 33 countries in Africa every day to serve clients. Now, we talk about 33 countries. From where we sit, we live this challenge every single day. Because one, you're looking about exchange control, capital controls across those markets. Yes, regulators. All these things introduce, friction in our cost. We talked about fraud. I think colleague. One of the ways of countering when you implement technology, you'll be looking at several regulators, and I'm looking at it from a private sector point of view. You're looking at several regulators across those geographies. I can speak to the fragmentation aspect of it. Several regulators. They are new. That is grade you are to be able to ensure these that are being actually implemented. All these complexities ends actually reducing cost that actually ends up being by client. Then the thing is currencies. You talk about in Africa is 55 countries depending on how you want to look at it. But that also speaks about currencies. And for you to go to do a cross-border transaction, as Mike has mentioned, you have to move from one local currency and convert to US dollar or BP, depending on what you want to settle. That is already that. Whether to become such an sensitive issue. It is not very easy to actually access to foreign banks to settle a euro. And so, in the African continent, the fact that payment from Nigeria to Cameroon, which is just next, almost like 45 minutes. That transaction has to go to New York, it has to go to London, or it has to go to Frankfurt, back to just next door. That again is a cost. So when you look at all those elements and solutions, we always have to have the fact that currencies that introduce conversion rate and transfer, those are all possible failure points that needs to be addressed. And the second thing is, the moment you have controls, limits, then you introduce the element of not being able to go through. That means you check it, you have a limit, you have to for documentation, you have to make sure check this and check. The moment it stops and somebody has to intervene, about now other human element, limit issue or checking a transaction before the transaction is delivered, you're introducing a cost to it. So that's also something else that I think we have to really address effectively. So when you talk about 55 countries, multiple currencies, multiple central banks, and we are at least we are fortunate that, for example, in the XOF zone, where they've got a common currency, you've got the ZAF common currency as well, so that almost reduces that component. But when you talk about all those currencies, really in the African continent perspective, we have to think about how can we have a settlement system in the continent that switches to African transactions, so that the only time you go outside the continent is when a transaction touches of somebody outside the continent. Because that way you can actually reduce, you can reduce the numbers, you can settle locally, and actually be able to reduce friction. So the idea of a Pan-African settlement mechanism that ensures that transactions within the continent can actually be settled locally here and even possibly leverage local currencies is important, and it has been to solve that. So I think that those are my high-level comments right now, and if we can find solution to that, it's definitely something that can bring a lot of value to the continent. Thank you.
Thank you. So you mentioned correspondent banking, and this is, of course, very relevant for these topics, but in general. And something that I increasingly in Africa I've seen through my trips in the region is the fact that sanctions, which is another bucket, a different conversation, one that it's not under the FATF because these are unilateral sanctions, is increasingly pressuring correspondent banking relations. And that is a reality that brings more complexity to the problem we're trying to solve. So it's just something to acknowledge in these conversations, as you mentioned. So I think from my side, I would like to do a recap and then just give each of you 1 minute to complement what we have said here so we can move to the next panel. So something that I'm hearing here, and this is probably an invitation for South Africa for the next session that we have on this topic, who are we missing in the conversation? So which are the actors from the private sector that we are not engaging with that should be part of the solution? We're having the banks here, but of course there's many other players, in particular the fintechs, and importantly for cross-border payments, virtual asset service providers, that if they comply with the regulation, are very much used currently for cross-border payments. We see that they're using them for back office, so the settlement goes through the virtual assets from one country to another. I come from Mexico, and I know, for example, from Mexico and the US, almost 9% of the remittances are going through virtual assets in the back office. So you're dealing with the financial entities in the front office, but behind the settlement goes on virtual assets. So an invitation to make sure that we have everyone that should be at the table from the private sector. Secondly, who are we missing from the public sector? And this is not only a conversation to have between ministers of finance and central bank governors, the DPPs, where are the authorities that at the end it's a regulation that is being challenging? And again, I invite the audience to think at the international level, who is the interlocutor for this? So I know there's big efforts by the FSB, the FATF, the OECD to work with the GPA, the Global Privacy Assembly, on this issue, but there's no one body, one voice that can standardize these matters outside of Europe, and that is a challenge for this conversation. The challenge of the risk of fast payments and increasingly fraud, the numbers are astonishing. And for you in the audience that are in the matter of financial stability, the fact that the clients or users are having doubts about the payments, if they are doing the right payment, if it's getting across, does pose a challenge in terms of the perception of how trusty the system is. So fraud is a challenge, again, for these payments. So these are things that we might have to have in the room to have more of a complete conversation. In terms of what we see in the region that has been highlighted, a higher cost of remittances. So we heard the number 25, but in any case, that's very, very high. But even if it's at 10, 15, it's much more than it is in other regions of the world. And this obviously also applies to the Asia Pacific, that it's increasingly facing challenges on this matter. The use of cash was singled out as a challenge in the region. People feel safer sometimes to use the cash, or they think they get more for their money, and that poses a challenge in many broad aspects. What are the trade-offs? This is a difficult balance to make, and at the FATF we see it every as public servants, right? We do trade-offs and we try to conciliate agendas. So how can we assume some of these trade-offs and take them into consideration? So that would be kind of my sum up from my side. And with that, I invite each of you to take the floor for 1 minute to complement or add on, and we will move to the session on finding solutions to these problems that we have been diagnosing for a while. If we can follow the same order.
Thank you very much. Just as a parting thought, I think the political will is definitely there for us to do something about it. I think the stage has been set sufficiently for that. And in this regard, sub-Saharan Africa can also learn quite a great deal from those jurisdictions where the cost is significantly lower than in our jurisdiction. And I think in that regard, partnering up with some of the innovation hubs and some of the projects that are busy, that have been undertaken within those jurisdictions, those can be learnings that we can take forward and see how we can make it fit for purpose, provided, of course, that we have a clear understanding of the root causes of some of these, some of the pain points in the specific payment corridors. Because once you have that understanding, then you can solve for the specific problems that are there. Cash, for example, it has come out in some of the diagnostics that yes, it is a problem. So what is it that needs to be done? So then you can have meaningful conversations in terms of solution development. In regards to safety and security fraud, for example, we could potentially think around having centralized infrastructures so that as a private sector or even public sector for that matter, we don't compete on those things. We should actually, because it's everybody's concern, we can actually leverage off infrastructure such as that. I am, for example, seeing more and more central bank-led or public sector-led infrastructures that get built. How can we leverage off of that so that we don't duplicate costs? And those, for me, are very tangible things that are on the table. I think the political will is there, the technical know-how is there, and we can learn from other regions that already have things in place to do so. So I think that from my side would be all. Thank you.
Thank you. If I can ask you to stick to 1 minute, otherwise I'm going to start getting some hands on.
No, I'll be very quickly. I think to answer directly, the other parties at the table should be the non-bank payment providers. I think that the conversation shouldn't be payments alone. I think if payments alone are allowed to exist in its own unilateral space, we forget about payments should be an enabler. It's an enabler of many things, and it's why I mentioned data earlier on. Data privacy is extremely important. Data, making my data available because I'm unbanked to leverage banking products and to leverage my business and my cash flow is critically important. So finding that balance between getting a payment to enable banking and other ancillary services is critical to the outcome. Otherwise, we solve one problem, but we don't solve the bigger ecosystem.
Thank you so much. And it felt like a mourn session where we're mourning about issues that are not working, but I can assure you that there's so much work that's being done, within banks, but also kudos to central banks in the region especially, working on national financial switches in their countries. And my dream is one day, if we can have an interoperable system where you have these local switches, switching into different countries, I think that would be a plus. But also just to conclude and picking on the Deputy Governor's comment in terms of, when he was heading payments, I've been in banking for some time now and I've seen evolution in terms of, initially when 25 years plus ago, the only person on our ExCo who was approved as a fit and proper person was CEO. And then Enron happened. The CFOs were now being vetted to be fit and proper. 2008 happened. You found that the compliance became, very topical. So compliance heads, are now, viewed as very important in terms of ExCo. I think now with the topic of payments and with especially the Deputy Governor and the Governor's comment saying it was inundated by IT colleagues, if we don't do anything in terms of just killing, that pillar of payments, ensuring that we have the right people in banks, we have the right people in central bank to deal with the subject of payments, I think we'll be missing something, because we may deal with this element as an IT or operational item when strategically this is so important and it constitutes over 70% of actually what's happening in the banking sphere. And probably we need to just elevate the skill of payments within the sector. Thank you.
Yeah, I think, let me start by picking up from what our governor spoke about on the work that has been done within the SADC to actually bring all the countries together for settlement. Similar work has been done in the East, in the West African countries. So I think if we really want to bring down the cost, we now need to take that step of actually connecting all these, settlement systems that have been, good work has been done. We now need to bring it all together so that we have got a settlement engine that we can say within the continent removes that fragmentation that we've talked about. And the work has already been done. And that cannot be done by private sector. It has to be led by the central banks. It's a public good. There is no way a public sector entity can come in to really succeed in doing settlement for the continent. So we just need to connect the dots and bring all our settlement systems into one house. That will remove a lot of friction. Then the second thing is to understand that a huge number of our citizens are on mobile wallets, and it's not just all in banks. There's a lot of now new actors, new players. And all we need to do is also to connect them back to the same system so that you've got a system that is able to bring everybody, whether you are a fintech, you're a mobile network operator, you're a bank, but there's a way you can be able to connect everybody together for settlement. If we can do that, I think that will should be able to position us to move, to move to the next stage where we can then be able to just operate like other countries have done. Thank you.
So from my side, I thank you all for your participation and your views. I think from the last round of comments, I would just add the issue of technology and how important it is as a solution, also some challenges that they bring, but as a solution. And the fact that there's been several cases, in particular in Africa, I think I was looking yesterday, 7 or 8 examples of efforts to do interconnectivity of the cross-border payments. So maybe in the next session that we have next time, we could look into what failed in those cases, or go into the specific cases on the DPPs and find out more. So with that, I will thank my colleagues and we'll exit the stage. I give it back to the chair while the next session starts.
Thank you, Elisa, who, amongst other things, managed time really well. Let's go straight into the next session. We're just going to remove one couch because we've a few on the panel. The next session will be moderated by Tara Rice, who, as you know, is our co-host, and he's the CPMI Secretariat. Previously was Deputy Assistant Secretary at the U.S. Department of Treasury. So please do Tara and the speakers come up. Thank you. Panelists.
Hello. And we're ready to start the second panel where we're going to talk about some solutions. Thank you so much to the South African Reserve Bank for supporting this important priority of cross-border payments this year. We're very excited to work with the governor and deputy governor on this topic. So let me start with an analogy. It's great to be here in Cape Town. Cape Town is a city of connections. Not far from here, two oceans meet, cultures blend, and trade flows. But we've just heard that those connections are not seamless. How many of you have seen, for example, the unfinished foreshore freeway bridge here in Cape Town? Started in 1977 to improve mobility, the bridge was left incomplete. In some ways, this mirrors payments in sub-Saharan Africa. It has the foundation, the ambition, and the need. Yet without the missing pieces, cross-border payments remain fragmented. So the question for our panel today is, how do we connect the missing pieces to allow payments to flow seamlessly across borders? One key enabler is interoperability. So we're going to highlight in this session solutions that have worked in other regions, such as interlinking initiatives involving Singapore's Pay Now, the migration to the new ISO 20022 standard in Australia, the Eurosystem's approval of a TIPS copy to the Balkan countries, and numerous innovative projects led by the BIS Innovation Hub. So let me announce our distinguished panelists. First, we have Mrs. Michelle Bullock, Governor of the Reserve Bank of Australia. Ms. Bullock has been personally instrumental in the development of the CPMI's harmonized ISO 20022 data requirements. Pierre Cipollone, member of the European Central Bank's Executive Board. Mr. Cipollone is responsible for the Eurosystem's payments and market infrastructures, including the interlinking of TIPS. Cecilia Skingsley, head of the BIS Innovation Hub. Cecilia is at the forefront of driving innovation in the global financial system, leading numerous projects in the payments area. And then virtually we have today Mr. Kenneth Gay, Chief FinTech Officer at the Monetary Authority of Singapore. Mr. Gay leads the MAS's efforts in advancing financial innovation, digital payments, and cross-border payments interoperability. So let's start with our virtual guest. To Kenneth, in the last few years, Singapore has gained deep experience in establishing links with payment systems in other countries. International remittances and merchant payments are among the most prevalent use cases. Can you share with us your experience, please? How has interlinking affected the cost and speed of payments? And what can we learn or replicate in sub-Saharan Africa?
Can you guys hear me? Just to check.
Yes. Yes, we can.
Great. Thank you so much for having me on this panel and for accommodating my participation virtually. So I'm happy to share on Singapore's experience in payments connectivity, which could have some learnings for cross-border payments initiatives in sub-Saharan Africa. So the first part of your question, let me share briefly on Singapore's digital payments journey, which form the building blocks for our network of cross-border payment networks. Singapore has taken a progressive approach in building our digital payments infrastructure based on the principles of open access, interoperability, and connectedness. In 2014, we launched our Instant Payment Rail, or FAST, stands for Fast and Secure Transfers, which has enabled instant account-to-account transfers for both consumer-to-consumer as well as consumer-to-business payments on a 24/7 basis. In 2017, we introduced Pay Now, a central addressing scheme which has enabled individuals and businesses to make instant payments conveniently using just a mobile number or national ID. In 2021, we further enhanced interoperability between bank accounts and e-wallets by enabling non-bank financial institutions to access FAST as well as Pay Now. Besides instant payments, we have also made payments to merchants seamless with a common QR experience through a unified payment QR, which we call SGQR. Cumulatively, this impact has been significant. Today, more than 90% of Singapore residents and businesses are registered on Pay Now, while more than 98% of merchants have adopted SGQR. Briefly, let me now move to cross-border payments connectivity regionally, where this has been a priority for Singapore and ASEAN member states for several years now. Besides meeting the targets in the G20 roadmap for enhancing cross-border payments, payments connectivity also serves to support key ASEAN priorities of economic integration and financial inclusion. For instance, consumers in our region stand to benefit from lower costs as well as better speed and reliability in transactions. Micro and small businesses looking to expand across borders via e-commerce can now reach out to untapped consumer groups. And in-need groups in the region, such as migrant workers and student communities who need receive monies, can now benefit from faster and cheaper remittances. ASEAN central banks, including MAS, have been involved in various models for interlinking for both instant payment systems and cloud payments to support remittance and tourism flows. For example, in 2021, we connected Singapore's PayNow with Thailand's PromptPay in what was a world first. The success of this initiative then led to similar linkages with India's UPI and Malaysia's Vietnam schemes in 2023. On top of that, Singapore has also established QR linkages with partners in China, India, Malaysia, and Thailand. This momentum still continues. Under ASEAN's regional payment connectivity, the region now has at least 18 live instant payment and QR linkages with more QR linkages. Thank you.
Thank you, Kenneth. Let's turn now to one of my favorite subjects, 2022. So Michelle, you've been personally involved in the CPMI's establishment of the ISO 20022 harmonization requirements. Can you tell us a little about how the RBA's implemented them and more generally the role of central banks in implementing these important standards?
Thanks, Tara, and thank you for having me on this panel. I was involved actually chairing, before I became governor, I was involved in chairing a group that was actually working with the private sector. So I thought, well, it's a standard. Why do you have to harmonise? But it turns out that there are a lot of fields here. People use them in different ways. Different banks use them in different ways. So payee names, for example, dates, times, all these sorts of things, they get used in different ways. And that, of course, means that it's an impediment to straight-through processing and lowering the speed and the cost of the payments. So standardising in this way, I think, really does have a lot of very good results. The other point to make here is that the industry, I think, did come along very strongly on this initiative. We had a lot of buy-in from the private sector on this, but it needed central bank shepherding to do it. So I think it's really important in this particular, in payments generally really, I think experience is that often the public sector, and often that's the central banks, do need to get engaged and help to guide the industry to what we think is an appropriate solution. Payments is a network game and it's very difficult to do things bilaterally. So if you want to get joint solutions, you've got to really somehow corral the private sector. I'd have to say now that we've got the standards out there and the private sector now are moving to implement them, but again, it still needs some public sector involvement. So back in Australia, we have said to the industry, for our high-value payment system and our fast payment system, you need to start implementing the harmonised 20022, but it still needs us to be writing their case a little bit. We still need to be providing them with guidance. We, of course, operate our own, the Reserve Bank operates the high-value payment system in Australia, so we have a role to play actually doing our own work to make sure we implement the standards as well. So the central banks, I think, have two roles to play, or it's probably, and two dimensions. One is they can play a role internationally on the cross-border side. They can play a role in their own domestic systems. And they can play a role on their domestic systems by actually making sure that their own systems are going to implement the harmonised ISO 20022 and encouraging the industry and the private sector to get on with their own back office and making sure that they are able to accept these new harmonised messages. So I think there's an important role for central banks, but it needs to be done very much in concert with the private sector.
Thank you, Michelle. Thank you very much. So, we think about the role of central banks in payments as having, as three, overseer, operator, and catalyst. So let's turn next to Piero, and we're going to hear about the role of the ECB with TIPS. TIPS has made many steps forward to enable interoperability, and recently you've reached an agreement to provide a TIPS clone to the Balkan countries. Can you tell me about the benefits and challenges of offering clones of existing payment systems to other areas in Europe and beyond?
Thank you, Tara. Thank you for having me in this panel. So the ECB has been involved in interlinking fast payment system for many years because we believe this is the fastest and cheapest way to achieve the goal of the G20 roadmap on cross borders. And more fundamentally, we are embarking in this journey because we believe that any fragmentation, be it on trade or in payments, are really detrimental for growth and shared prosperity. So TIPS has been the workhorse for this journey for us. Just to remind everyone, TIPS is a fast payment system, works 24/7, 360. It's owned by the Euro system and settled in central bank money. So in interlinking, we have several projects going on. Some of them are more advanced stage. I'm referring to the interlinking with the Swedish Corona, for example, the Danish Corona. Others are at the beginning, on the early stage, like interlinking with the UPI India or Nexus on a multilateral base. So TIPS clone is the newest project along this line. Essentially, the idea is to replicate for the Western Balkans the same original TIPS that we have now on a segregated platform. Well, why we embarked in this project? Because the Western Balkans, I'm referring to Central Bank of Albania, Bosnia-Herzegovina, Kosovo, North Macedonia, and Montenegro. Thank you, Governor. So they wanted to renovate, actually build their own system. So they identified TIPS as a ready-made solution to be implemented immediately. So in January, we signed with them an agreement to provide them with this solution, and actually Bank of Italy is the actual provider. So what are the benefits? Well, for us and for them, the immediate benefits is the integration. Much stronger integration, which means lower prices, speed. This is essential. For the specific of the Western Balkans, certainly they now have a system that is state-of-art and very cheap to implement, because we do not have to reinvent the wheel to implement the same system across the Adriatic Sea. Third very important element, since TIPS is multi-currency, so each of these countries can have its own payment system, which is segregated, but at the same time, they can integrate much faster among themselves using this facility that we are about to implement, which is the cross-border, cross-currency transaction, meaning essentially that the payee can send payment in her currency, and the payer can send the payment in her currency, and the payee will receive instantaneously in her currency. So there is the transaction, which is instantaneous, with the exchange rate embedded in the transaction. This means that they can integrate very fast. What are the challenges? Well, I think there are two kinds of challenges. One is from a technical point of view, and one is a non-technical point of view. On the technical point of view, the difficulty is first onboard the system, all the banks. But at the same time means that the two TIPS need to evolve at the same speed. They cannot. They need to evolve in sync, because any disalignment of the two would lose the disadvantage of being completely aligned. In terms of the non-technical, the difficulties are the usual challenge, the usual suspect, AML and CTF. But those challenges can be overcome if you have PSP on both sides, because they essentially share the same language on both sides, on both the jurisdiction, so they can implement the changes very easily. And in terms of IML, being on both sides the same PSP, they know, the client, so they can process the payment much faster. Can we replicate that in other places? Well, from a technical point of view, it's not that difficult, but I think a case-by-case approach is needed. Let me stop here.
Thank you, Piero. Let's move now to Cecilia. Cecilia, there are several relevant BIS Innovation Hub projects that would have, well, some relevance for sub-Saharan Africa. Could you describe a couple of them? Nexus has been mentioned. There are many others.
Sure, thank you for having me. Let me start by Nexus, talking about Nexus. So around the world, there are more than 90 fast payment systems. And in this magnificent continent, if all the plans that we're currently seeing is coming into fruition, I think only one African country will be without a domestic fast payment system in the next years to come. But fast payment systems are operating in one currency each and for the clients of that particular country. We heard from Kenneth Gay from Singapore that they have successfully connected their fast payment system to make payments through to Thailand. But if you think about the world where these fast payment systems are connecting bilaterally, you can imagine that we would run into a very complex maze of connections, and that would simply not be realistic and certainly not feasible. So Project Nexus, I think about as a sort of a one-stop shop where a country that has a fast payment system and wants to be able to open it up for clients to use it to do cross-border and cross-currency transactions could then connect to the Nexus platform. Once you're there and you apply to all the rules and you have the right plugs, you're good to go. Nexus transactions can be thought of as an orchestration between two domestic payments in sequence, and there needs obviously an FX provider maintaining accounts in both countries to make it going. And if you think about internet protocols, Nexus proposes really a single hub for any country to plug their systems into. We have been working on this for a number of years. We think it aligns with the G20 cross-border payments roadmap targets. And we're very happy working together with our partners in these projects, the central banks and the fast payment systems operators in Malaysia, Philippines, Singapore, Thailand, and India, which are gradually now taking over what has been created within the BIS Innovation Hub with the intention to run it together. And BIS will step out as this comes into fruition. Let me give you some numbers here. In these countries, there are more than 1.6 billion people. And they're all fast paymenting away every day as we speak. And if you also add the fact that Indonesia, and thanks to the visionary leadership of President Lagarde, they have become special observers completing in the feasibility and connectivity assessments. That would potentially add another 750 million people to use this service. It looks like a pretty good starting point from a market perspective that this could have great demand from the very beginning. It is aiming to be a global solution rather than just a regional one. And the intention is really to grow beyond those 5 countries as the platform gets more established. But there are many issues still. It's about payment compliancy, AML, cybersecurity, privacy, but let me come back to that in a minute.
Thank you, Cecilia. Let's go back to Michelle. We heard a little bit in the first session about correspondent banking. Australia is an important source of remittances, and many of the key receiving countries are affected by the decline in correspondent banking. How can we address these challenges?
So this is a very big issue in Australia and the Pacific. So a lot of the Pacific Island countries are finding that correspondent banking relationships are gradually withdrawing. And this is an example, I think, where it's not just a role for central banks, it's actually an important role for governments here as well. So I think the central reason, and this might well be the case where we're seeing declines in correspondent banking around the world, is that the private financial institutions just don't see a risk cost. The costs and the risks of doing this just don't balance out for them. They just can't make money out of it. It's too risky business. It just makes it very unattractive for them. And I suspect there might be some of that in the sub-Saharan Africa case as well. So what we've been trying to focus on is how do we lower the costs for the financial institutions to provide these sorts of services. And again, there's not easy solutions here, but there's probably a couple of areas that we've been focusing on. The first, as I mentioned, is increased standardisation of payments infrastructure and regulatory arrangements. So the ISO 20022 harmonisation is important here, and getting the Pacific Islands to also participate in this standardisation so that they can take advantage of possibly straight-through processing, which might allow costs to decline for the institutions that are providing it. And it also will mean, if they do that, they can align their own payments infrastructures with payment infrastructures around the world, and that might provide opportunities like Cecilia was talking about, and for linking, interlinking and so on. The second area that is important and gets raised a lot is AML-CTF compliance. And this is an area of risk that a lot of the private financial institutions find is in some cases just too much for them. They're not prepared to take the risks. There are projects in Pacific Island countries to try and uplift their AML-CTF, which might help, so that's something that they can do. Technology, though, is also something that can help, and I don't know if Cecilia is going to mention Project Mandala, but we've done a little bit of work. Reserve Bank of Australia participated in that project as well, which was looking about how you can automate some compliance procedures. So again, possibly reducing cost and risk for some of the private financial institutions. The only other point I'd make, and it comes back to something that was said in the first panel, and that's competition. It's important, I think, for countries to have policies that encourage competition, that encourage new providers to come in with new innovative ways of doing things, and also to increase transparency. So how do people know what it costs them to send remittances? If there's somewhere they can go to compare, then I think that's very helpful as well. And there is, in fact, a comparison website now that the Australian government has supported, which allows people to go and see how much it's going to cost them from various providers. So there's work that could be done, I think, there as well. So thanks, Tara.
Super, thanks, Michelle. So let me turn next to Kenneth, again virtually. And in the interest of time, let's keep our answers to 2 minutes or so. So Kenneth, we heard from Cecilia about Nexus. Singapore is involved. Could you please tell us about Singapore's experience and share some lessons learned?
Sure, yeah. So just briefly, three quick first, the value proposition in multilateral approach. So as Cecilia has noted earlier, whilst our bilateral linkages have been successful, they do present significant scalability challenges. And this is why we are quite keen on multilateral interlinkaging approaches that offer an efficient, scalable approach for cross-border connectivity, such as Nexus. So one potential learning here is that, from what I understand, that there is the Pan-African Payments and Settlement Systems, or PAPSS. This seems, we think that this would be able to support cross-border connectivity by not only advancing interoperable standards and infrastructure within Africa, but also potentially integrate with other payment systems in the world, such as Nexus. The second point I wanted to make was on inclusivity and accessibility. So, as I shared earlier, regional payments connectivity is a means to an end. In ASEAN's case, economic growth and financial inclusion. Similar to Africa, I think ASEAN has a growing digital economy driven by a young, tech-savvy population and growing middle class, which have adopted online banking services, mobile money, and So this widespread availability of smartphones and increased penetration has played a central role in ASEAN's growing network of bilateral, instant, and QR payment linkages, which in turn provide more inclusive access for consumers as well as micro and small businesses. Nexus is also similarly designed with inclusivity as a core guiding principle. All banks, non-bank payment service providers, they are eligible to connect to a domestic IPS, can connect to Nexus, and this should expand Nexus's reach to end users in participating jurisdictions. Finally, to add to Cecilia's point on safety and integrity in cross-border payment systems, Singapore, like many other countries, is currently facing risk of scams and fraud. We have benefited from innovative payment solutions that make payments faster and cheaper. However, this benefit also extends to scams. They use the same tools to obtain illicit receipts and rapidly disperse them around the payments ecosystem and with cross-border linkages, cross borders as well. So ensuring the safety and security of each payment transaction helps to build trust across Singapore's cross-border linkages, and this is critical towards encouraging greater adoption and utilization. So besides anti-fraud measures that inherent in payment systems, what is of critical importance is close collaboration and cooperation with the various stakeholders within and outside the payments ecosystem to address the threat of scams. So it is only with this collective approach that we can make cross-border payments safe and secure for everyone.
Thank you very much. And you've introduced the next topic in question perfectly. So safety and integrity is critical to maintain while we work on improvements to the payment systems. And Cecilia is going to tell us about some Innovation Hub projects that do just that.
Thank you. We know many central banks are operators, overseers, and catalysts of infrastructures, and with that also comes a lot of responsibility. So let me just take you through a whistle-stop tour here on where we try to be helpful, supporting and combating financial crimes. So very quickly, 5 levers to ensure the integrity of payments. First, compliance checks. As you pointed out, Michelle, Project Mandala are sort of helping out entities to screen our payees on public sanction lists. Are the rules and capital flow restrictions applied to specific sanctions? Well, here Project Mandala helps to address these questions, providing a solution to automate compliance procedures, and it comes out of the Singapore Center. Transaction monitoring, suspicious features around the transaction, and here experiments like Project Hertha explore how network analytics can help identify financial crime patterns that warrant a second look. And the third layer is about what we call collaborative transaction analytics. Excuse the jargon here, but it's about both collaborate between public and private sector while using particular tools like transaction analytics, special methodology in that space, and Project Aurora, who has showed promising results using machine learning, have really shortened the discovery and made it more efficient in discovering money laundering pattern and financial crime networks. Fourth, we want transactions to be private in the right way, and all these projects that I mentioned had explored different kinds of privacy. And last but not least, cybersecurity is a key. So we have a project called Raven that is going to help financial institutions, certainly central banks, in their oversight objective to make sure that the cybersecurity is where it is. And let me just end by saying that all these things I've talked about is about improving the current systems, but we're also looking into the future and see what can promising technologies do for the future of correspondent banking network. And here I would like to emphasize Project Agora, which has 7 very distinguished important central banks behind it, and together with more than 40 financial institutions that are basically the correspondent banking network of the world, we are exploring tokenization, and it looks really exciting, really promising. A bit further down the road, but stay tuned.
Thank you, Cecilia. I think what's clear when you do your whistle stop is that it's really a suite of products and projects that together can really make some enhancements. So let's turn last to Piera. We've mentioned a couple times the three roles of the central bank in payments as operator, overseer, and catalyst. Let's talk about the central bank's role as catalyst.
Yes, obviously, being a catalyst is a very important role. Let me try to explain why. Payment is not a sexy topic, right? And hardly makes, you know, the headline, except when they do not work. But again, I mean, the improvement and modernization is essential because think about how much time we spend in trying to reduce the barrier on trade. If we do not accompany this with a reduction, I mean, an improvement in payments, all the efficiency we gain on trade will be transferred as a rent on the payments. So improving the payments cross-border is essential. But it's for the central bank to keep this topic center stage. Otherwise, you know, will not be high in the agenda of the politician. So the ECB plays its role as a catalyst essentially by gathering and chairing committees of private sector actors representing both the demand side and the supply side. On the retail, specifically on the retail, we chair what we call the European Retail Payment Board. On the cross-border, the latest and most important achievement we have reached is this scheme which is called one leg out, because any payment that cross the board needs to have a specific scheme. With the European Payment Council, we have agreed on that. So this is another step to improve the cross-border. In general, ECB is participating in all the international group dealing with cross-border payments because we really believe that a better plumbing of the international monetary system is a common good for everyone. But let me close. It's important, the catalyst, but sometimes you really need to step in because the fragmentation is so high that you really to push hard to move the system from a bad equilibrium to a better equilibrium. And that's why we are doing the digital euro. Let me stop here.
Thank you very much. So let's give our panelists a hand. And I'll turn it back to you.
I don't mean, yeah. This side event should be probably the top event for time management. It's precise, and we're very proud of that. Yeah, we trust that. So we're ending the session obviously with Governor Panetta, who is the governor of the Bank of Italy and chair of the CPMI and co-chair of the CPC. Governor, thank you very much.
Thank you, Vice Governor. I like your introduction. We are closing with Governor Panetta, obviously. Okay, so, sorry. Thank you. So, dear colleagues, you are underestimating my body. So, maybe it's the comparison with the recession. He's taller, he's stronger, but, you know. Dear colleagues, distinguished guests, let me first of all thank the speakers for their insightful contributions and the participants of this roundtable, and thank you to the South African Reserve Bank for organizing this event, which I enjoyed really very much, and I hope you did as well. The discussion has greatly improved our understanding of the existing challenges to the functioning, to the smooth functioning of the cross-border payment system. And this will be extremely, the discussion we had today will be extremely useful for the work of the Committee of Payments and Market Infrastructure and the cross-border payment coordination group that I chair with LESESHA going forward. Now, as we bring this seminar to a close, let me try to summarize the very rich discussion we had and the key challenges and lessons that we have, you have gathered, focusing on enhancing cross-border payments in sub-Saharan Africa, where, as we heard, the cost of a cross-border payment can be as high as 25% on average. So this means some payments are even more costly than that. We heard that efficient implementation of anti-money laundering and countering the financing of terrorism measures remains a costly factor. Of course, we don't want to compromise on the integrity of the payment system, but there is certainly, as we heard from panelists, room for further automation, risk-based adaptation, and simplification. Simplification, not deregulation, simplification. We don't want to water down the checks on AML and CFT, but certainly we can simplify and standardize those checks and so reduce the cost of cross-border payments. And similarly, capital flow management measures can lead to unintended bottlenecks. Furthermore, many emerging market currencies cannot easily be exchanged against each other. This creates additional burdens and costs for payment service providers that ultimately, inevitably fall on the shoulders of the payers and the payees. Not least important, the absence of interoperability among domestic payment solutions has deep implications for end users. Beyond causing some inevitable frustration, it impacts negatively on the final costs and the speed of a transaction. However, as we have heard in the discussion today, adopting modern and up-to-date payment infrastructures can create a fertile ground for interoperability, which is key to overcoming some of these challenges. Here in the beautiful city of Cape Town, let me make the parallel with cross-border payments. The difficulties that we discussed today evoke me those that are faced by sailors navigating the challenging waters of Cape of Good Hope, which is also known as Cape of Storms for the stormy weather and rough seas. Just as tailors need skills to adapt to different sea and changing weather conditions, they could not survive without the right equipment, including a solid ship. The same applies here. Without solid weatherproof domestic payment systems, it is not possible to successfully navigate the frictions, the inefficiencies, the barriers also, because we also have barriers of cross-border payments. Here, a critical takeaway from today's discussion is the importance of focusing on domestic improvements to enable cross-border payments through interoperability. Mr. Cipollone just gave us a virtuous example of the use of interoperability for cross-border payments. This is what the Eurosystem is doing vis-à-vis the northern European countries in the future, in the near future. The project that Mr. Cipollone has explained, the linking of the Western Balkan countries to the Eurosystem, will take a matter of months. Don't ask me how many, but months. And you know, the nice feature of the possibility of interlinking with existing cross-border payments is that this solution is available today. Because I agree with comments by Cecilia, by our colleague from Singapore, that there could be other ways of solving the cross-border payment issue with hubs, for example. But you know, we need it today. Maybe that in 10 years from now we will have better solutions. We will think about that in 9 years from now. And also a cross-border linking of existing payment systems simplifies the governance issues, which are one of the main obstacles to cross-border payments. Now, there are, however, some conditions that need to be met in order to go into this direction, the direction of interlinking. Each jurisdiction has a different starting point and faces unique challenges. However, the tools that are needed for every ship to make it seaworthy, such as a rudder, a wheel, and navigation system, we also have here this need. Standardization, cooperation, and innovation are those tools that make domestic payment systems fit for cross-border payments, which is the objective that we are pursuing in the international community. Payment infrastructures improvements are a precondition for success, but it is ultimately the end user experience that decides success or failure. Collaboration among all the stakeholders involved to get more simplification, more standardization, greater regulatory alignment can drive innovation and create more user-friendly payment solutions. So to conclude, as we chart our course forward, let us keep in mind that through collaboration, and finally, collaboration, we can set the right coordinates, even if we have different starting points, steering together towards a more integrated and efficient payment ecosystem. Thank you for your participation, and I think I was within the time constraints. Thank you very much.
Thank you very much. Well, we close. I'm told that lunch is at Hall 5. Lunch is meant to start from 12:30, but if you go now, you may have some first mover advantages. So thank you very much, everyone, for a fantastic session. Thank you.